You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan and welcome to Masters in Trading Live. At Masters in Trading Live, we get on here every single day. We get on here 11 o'clock Eastern time and we are live. So if I mess up at all like that, we're live. I can't go back and fix it. Every single day, 11 o'clock Eastern, I'm gonna get on and we're gonna share an overview of the market. What's going on? And then every single day, we're gonna share our number one trade of the day. So today, first topic is our second catalyst of the week. The first catalyst of the week, Fed. Fed doesn't move rates. Non-farm payroll is the last Friday of every month, is the first Friday of every month. Again, see, we're live. I can't cut that out. Non-farm payroll is a volatility catalyst that comes out the first Friday of every single month. That's our first topic. QQQ. 433. For those who have been watching Masters in Trading Live, starting on April 1st, we had our line in the sand. A line in the sand is above this level, we're bullish. Below this level, we're bearish. Our line in the sand has not moved. It's the same exact thing. Third, we're going to break out a new acronym, SIFI. Set it and forget it. Most of the trades that we share are set it and forget it. Let me explain why. What you don't want in the market is you don't want tail risk. You don't want to wake up and be like, oh shit, I just blew out my life. What am I going to possibly do? Set it and forget it with a fixed amount of risk. So you never have surprises. You can never lose more than you risk. And then finally, our trade of the day. So let's get to the screen. Every single day, we are sharing trades, right? So therefore, we got to clean up the portfolio. We got to cover some of the trades. So that's what I'm going to do to start out right now because RELY is an earnings trade. We shared this April 11th. Now, the cool thing about these videos, guys, is if you want, you can go back to April 11th and watch the video. You can watch the video on Masters in Trading YouTube channel or Masters in Trading /live. And you can see the exact trade that we do. Now, this is an earnings trade. I'm not going to go through the full earnings advantage approach, but the way that we trade earnings is it's very consistent. We're looking to make a bunch of trades, but we're looking for high probability trades. And so RELY, the trade that we did is we did a trade where we're doing a strangle. And a strangle is a way for traders to take advantage of volatility by buying one put and buying one call, or buying 10 puts, buying 10 calls. You're playing for movement. We've gotten a ton of movement because RELY has released earnings. RELY has dropped down to 1471 last trade. You'll see RELY closes within these bands, its expected move 75% of the time. Right here, we want to get on prints. So we want to do a trade. What can we do? RELY, the long strangle, 20 puts, 22 and a half calls. The original price to get in was $2.50. Right now, the 22 calls are worth bupkis, absolutely zero. See, I just messed up again. We're live, guys. I can't fix that. The 22 and a halves are worth zero, and so are the 20s. The 22 and a half calls are worth zero, but the 20s are worth about $6 mid-market. So look at this trade not as two pieces. It's one trade that costs $2.50. That trade right now is worth $6. So let's take off the puts in the Riley trade. So we're closing, we are selling puts to cover, and we are holding on to our calls. Another quick trade, this is more just cleaning things up. This was shared on March 21st. It's AMN, a covered call trade. AMN, we're long the stock's going against us, but the calls that we sold for 227, we are going to waive those in. So we are going to buy to cover these 80 calls. Right here, you could be 45-cent mid-market, work a limit order. I'm sure you'll get filled. We're still long the stock. We're going to hold the stock. ALAB. Another trade we've been talking about through the week. Now, this one is a slippery little sucker. And I've covered this throughout the week because what's most important is I want you to understand the trade. Okay? Traders cannot risk money without understanding the trade. You have no passion, you have no belief. When you get into a trade and you believe in the trade, when the trade goes against you, you may see that as, wow, this is on sale. I love it. The market's doing me a favor. What a great day. As opposed to if the trade goes against you thinking, oh shit, here we go again. So ALAB, we did this trade right about here. ALAB is a lockup trade. We got in our first tranche in ALAB here. We actually got in at pretty bad levels. As it rallied in our community, I shared ALAB is a lockup trade. No matter what ALAB does, it's inevitably going down, in my opinion. So what we need to do is we need to manage money, guys. It's a money management trade, okay? So you could sell one. Ideally, you want to sell two. That's what many in the Discord room did. Then here you buy one back. You could still hold a core position. That's a cool trade. But if you got in at those not great levels, like this guy, I'm pointing to me, I didn't get any great levels. What I like to do here is break even on that trade. So 55 puts in July. Again, I'm doing these trades at 11 o'clock Eastern, so it's really wherever it's marking at that time is where I'm filling myself. Our first fills were at 320. Well, let's just take those off, please. 320, cover, close, break even on that trade. We are still long one tranche. I think we're still long from $4. Something that you can consider doing if you're up a bunch of money on the trade. This is what I really, really like. If somebody is sitting in these 55s for $2 or whatever, you could sell these 45s. Don't touch your options. If you're long the 55 puts, you could sell the 45 puts. That's a preferential way to manage money if you got in at good levels. Again, I got in at shitty levels, so I'm going to make sure that I break even because what I want is when ALAB comes back up here, I want to sell. What ended up happening is if you get in at bad levels, it goes against you, you might not have that dry powder needed to sell. So hopefully you got in at better levels than I did. I don't know how you couldn't. I happened to get in at the very worst possible levels that ever existed for ALAB. We will still be talking about this trade going into the lockup. Any other questions about ALAB 2, guys? Easiest thing you can do, send me an email, contact@mastersintrading.com. I will reply. I'm not going to reply to you. I'll probably just get back to you online. But please, any questions, send me a note. Okay, this is serious stuff. Line in the sand. Another topic that we've been talking about, and I want to go back because the topics that we're talking about are not something we're talking about in 2024, and we're going to talk about something else in 2025. A line in the sand is one number. One number. Above it is bullish. Below it is bearish. Okay? One simple number. If I take you back to April 3rd, and again, I want you, if you want to learn or if you have any questions, go back and you can look at the exact videos. April 3rd, today is May 2nd, so we're 30 days away. We started with a line in the sand. The line in the sand was 518.40. Above bullish, below bearish. Okay? SPY, very, very volatile. Okay? If we look at the Qs, the same day, oh, this is the SPY, sorry about that. So again, we go back to April 3rd, this is what it looked like. And now, present day, just to show you how the market behaved around these crucial levels. Above bullish, below bearish. Qs. Here's the level we talked about April 3rd, 433. We mentioned this level. We had mentioned it in every video in April. How did we act around this level? Well, 433, May 2nd. Okay, we get through, it proves to be resistance. When we fell, I believe I called that the lamest rally in the history of the stock market because it couldn't really fall. There was nothing in there. Okay, we rallied, gap down, but right away it covered the gap. It doesn't do anything. We do have problems with this line in the sand. It's still respecting it. Stick with that level. Above, we are going to see that rip your face off rally. But we're certainly having a tough time getting above. If we do get above that level, we are extremely bullish, guys. I want to introduce you to a new friend of mine, Ron Pompeo. Any of you guys familiar with Ron? Ron, I didn't realize this, is known to as the initiator for the term set it and forget it. A term that was originally applied to rotisserie chicken back in the 1980s in an infomercial. Well, set it and forget it. Thanks, Ron, for bringing this to our attention because this is exactly how we want to trade. These are the kind of trades that we want to make. SIFI trades, set it and forget it trades. Set it and forget it trades is buying an out of the money call or a put. Okay? If the stock's at 10, if you buy the 12 calls for 50 cents, 10 times, you have $500 of risk. You can never lose more. If the stock's at 10 and it's 12 up here, why would you want to be long stock from 12 when it's trading at 10? Because you get massive, massive leverage to do that. You can set it and forget it. Because when the stock gets above that level, think of it like you're just long 100 calls. You can never lose more than you risk. That's why you can set it and forget it on a 50-cent trade, go travel for as long as you want, come back and see how you did. These are really, really cool trades to do. Lots of other set it and forget it type of trades with fixed amount of risk. That's the kind of trades that we like to share. Trade of the day, we are in earnings season and things are moving around. Again, because we're sharing a trade every single day, over time, we end up accumulating a whole hoot of trades. So it's important to manage those trades. What I'd like to do today, we have a position in FSLR. Market's a little bit heavy. It's under our line in the sand. We are going to tranche into this at additional levels. Now, when you buy options, you're in the option until they expire. So FSLR, okay? We got in for $2.15. That was the trade that was shared. Trade shared on April 25th. This trade is bad. If you risk $215 on this trade, 150 puts, those are worth 50 cents right now. Not good, right? The trade's not over. We want to stick with this trade. Before you get into any trade, you need to think about how much am I comfortable risking? And let's say a trader is comfortable risking $1,000 on a trade. We want to do these trades in tranches. So if I have 3 tranches and we have $1,000 of risk, our first tranche we may risk, say, $300. Our next tranche because the trade's gone against us. So again, you can never lose more than you originally bet. We want to fade. We want to add as it goes against us. Now, a trade that I like right now, what about these 157 halves for mid-market for $1.20? So buy to open, $1.20. Now, if you did one of these, perhaps you can do two of these because we want to risk the same amount each time because we're comfortable risking $1,000 on the trade. With these trades, it's set it and forget it, and we are holding until expiration or until we can make a big fat profit. So the order, buy to open, 157 half puts, and let's call that $1.25. I'm going to hop back on here. Now that we're in the heart of earnings season, if you look at the portfolio, if you go back and watch some of the trades, we have our earnings trades. I think we have 3 or 4 earnings trades. Rely is the first trade. Remember, we've just taken off the put side. Rely, we don't have any risk, but hey, maybe that sucker starts to rally and those calls come back into play. Keep watching that line in the sand. I want you to be blown away that we shared an important number on April 2nd, and 30 days later, and every day in between, we are still talking about that one simple number. Take a step back, look at the bigger picture. There's not that much going on, right? We're right by that same number. Patience. Wait for that breakout. Above 433, we're going to see that rip your face off rally. And if we can't rally, we're going down. Watch for that VIX to start to spike. My name is Jonathan Rose. I'm a big believer. We want to look at things different than every other trader. I like to say that creative trader wins. So trade smart, and I'll see you live tomorrow, 11 o'clock Eastern.
Join us every weekday at live.mastersintrading.com.